afternoon from Los Angeles and welcome to Stock Market Today, sponsored by Interactive Brokers. On today's show, we're going to be taking a look at the charts of Target, Fortinet, as well as Crocs. But first, let's take a look at the major indexes. It's Alyssa Corum here, and today I'm joined by Ed Carson. And Ed, we saw slight gains across the board today. The Nasdaq and Dow finishing up 0.1% apiece. The S&P also up slightly, holding at highs after strong gains Monday.
Yeah, I mean, pretty constructive, really, because we've been running up quite a bit, actually in the last week or so, and really over the last several months. So there's nothing wrong with having just a modest, slight, steady action today. You just take a look at that run we've had over the last several months. This is the Nasdaq here, and leading stocks acted well. This is just sort of a quiet session, and that some days aren't really that exciting, but there was absolutely nothing wrong with today's action.
That's right. Does it now become a concern for investors that we are getting a little bit more extended from those shorter term moving averages?
Well, yeah, and that's why a day like today is great, because it's like you don't suffer any real pain because we just went sideways and actually rose a little bit, but it allows a little bit of time for those moving averages to rise up.
Perfect. Well, let's take a look at some individual names, starting off with Target, which has been such a strong stock this year. It tacked on a gain of about 1.9% today, and it's been holding in a relatively tight range after that big earnings gap, which we've seen now over the past several quarters, these huge earnings gaps from Target, followed by sideways action. So what do you make of today's poke into a new high?
Yeah, I mean, that is one thing to note. Is there's a concern is that will it just not go anywhere? I mean, maybe it'll hold where it is now, but will it really surge, before earnings? Yeah, I mean, the story is great. Earnings growth has accelerated for the past 3 quarters. Target really seems to be nailing it with a hybrid strategy. You order online, then you pick it up in store or curbside or next day service. There's just a lot of things that it seems to be hitting it right. But, will it move until the next earnings season? And then you don't know. And then if you don't have a cushion, that's the issue. But, the stock has been acting great in many ways. So, it's definitely in buy range, but that is something to watch out for as well.
Right, yeah. I think if they end up saying anything about how the holiday season was for them, that could be a potential catalyst, because, I mean, if you go on the site, they are willing to give you pretty much free, quick shipping on anything, and even single items. So really a force to be reckoned with, I think, compared with Amazon. So if they can eat into any of that market share, who knows?
Yeah, because Amazon, it's hard for them to do single-day shipping. I mean, it's actually harder for them than Target or Walmart. And Target has its stores in cities, where Walmart is more the outside. I mean, yeah, there's a few in LA, but boy, there's a lot more Targets in Los Angeles. So it's a lot easier to source from there. Interesting
story to follow, indeed. Well, moving on, let's take a look at Fortinet. The ticker there is FTNT, and a tight range was a little bit tested today after a breakout. We saw that stock falling about 0.8% today, but coming well off of the intraday low today. So it's still holding in a tight range, and it looked like it managed to close above that 106.10 buy point that we were using.
Yeah, and this was actually a tight pattern, 3 weeks tight pattern, where Target was sort of tight-ish, and this was just nice action. It had a nice run up. The original base was a little wide and loose, so you can understand why you might be, I don't know if I really want to jump on that. And it was one of the first software stocks to really come back. And so this one, nice tight action after a run up, broke out. A lot of stocks either cleared tight action or reclaimed buy points, like Autodesk and Splunk. And for the most part, they came back a little bit, but held up. And so this is, again, sort of that sort of consolidating action we saw the market did. These stocks are doing it, but everything was fine. Not too many out that are out there in that space, but there's a new IPO Ping. There's a few others that are coming up, but Fortinet is definitely one of the software leaders right now.
Yeah, and really the only time that the action wasn't very tight was intraday one day, but it was able to close super tight and found support at that 21-day exponential moving average, which it's not on this chart, unfortunately, but it's something that we've been looking at more and more lately.
Absolutely, it was a really nice shakeout and nice support that day.
All right, and last but not least, let's take a look at Crocs. The ticker there is CROX, and Crocs is continuing its gains after a really strong session on Monday, tacking on another 1.8% today in a little bit lighter than average volume. Now, it's extending its gains after a breakout from an earlier entry, and it's now approaching prior highs.
Yeah, there's actually a handle there. It's a sort of a consolidation. It's actually sort of a base on base. It's just a little handle that was just above the midpoint of the handle was just above the midpoint of the base. So it was valid, and the base wasn't that deep. So it's not like there was a ton of overhead resistance. The stock had gapped up on earnings. You can see that a few months ago. That's where the new highs are. Then immediately the company came out and said, we're doing a stock offering. Well, that's always fun when they do that. So the stock came down, but it held onto its gains. And, actually, I think Crocs looks silly, but this stock does not. I mean, so Mike Webster, who, is, a portfolio manager here and is on IBD Live a lot, he swears by them. I would swear if I was given them, but this is a stock that's really good. And, so that's just something you need to put aside of your biases. Not everything's going to be a tech stock or that new thing or a software maker. Hey, this one has pretty good earnings. Stock is moving out and it's in a buy zone, so don't ignore that.
Well, now we know what to get Ed for Christmas. Some Crocs there, and nice support at the 50-day. And something that we've been looking at more and more too are these handles, alternative pivots for early entries, more aggressive investors. But again, it is approaching those prior highs too. It's about 1% below that level. So we'll definitely keep it on our radar for now.
Yes, we will.
All right, and moving on to a couple of announcements for you. IBD Live is here, and as Ed mentioned it a little bit earlier, so you can head to investors.com/IBD Live to get a free 2-week trial, but it's really awesome, and I'm not just saying that because I'm on it, but no.
That makes it
every
really
once in a while, no. But really going beyond the headlines and breaking down the stocks and what's actionable, right?
Yeah, we're really trying to focus on those actionable stocks and really, discuss, the pros and cons of each one, and maybe, we saw all those stocks. We were looking at Autodesk, we were looking at Splunk yesterday, and just really trying to look at those things. And I think it's really interesting because you sort of get that group attention kind of thing, where as opposed to being isolated, a lot of people are, and I'm so thankful just to be in this room normally, and it's a lot of fun, but I think it's really educational.
Yeah, it definitely is, and you can submit your comments and get feedback in real time, so lots of great stuff to like there. And related to IBD Live, we have a webinar coming up on Thursday at 11:30 a.m. Pacific. It's trading strategies for the opening bell with our very own Ed Carson and David Chung, and you can get all the details on that and sign up at investors.com/webinar. But Ed, what can everyone expect from the upcoming webinar?
Well, we're going to discuss what we do overnight, like after the close and before the open. What do we do to prepare to sort of like figure out, what stocks we're looking at, both as investors and as editors, sort of like really key. And there's just some of the lists, some of the features that we look at just to be ready. So at the opening bell, we're not caught off guard.
Exactly, because if you wait until the stock is already gapping up and you haven't done all the research, you might end up making the wrong decision.
That would be that you really need to do the research ahead of time.
Mm-hmm. All right. Well, again, go to investors.com/webinar for all the details on that. All right, everyone. Thank you so much for joining us today, and we'll see you right back here tomorrow.